All right, everyone, get ready, because today we are diving headfirst into the Kenyan Income Tax Act.
Buckle up.
Yeah, I know what you're thinking. Not exactly a relaxing day at the beach, right?
Right.
It's over 200 pages of intense legal stuff. But believe me, getting a grip on this thing, it's empowering.
It really is. Think of this deep dive like, it's your treasure map. We're going to cut through all that dense legal wording to find the good stuff, the
Yeah.
parts that really matter to your life, your business, even your wallet.
And this isn't some ancient relic gathering dust either. This act has been updated and tweaked so many times since it first came out back in 1974.
And many times.
We're talking big changes in 2002, 2008. Then there was 2014, 2016, 2020, even as recently as 2021.
Exactly. It's like it's always changing, always evolving, trying to keep up with how Kenya's economy is doing. Shows you it's a living document,
Mm.
reflecting what's really happening out there in the world of business and finance.
Okay, so where do we even begin with something this big? It's like walking into a giant library and trying to find one specific sentence.
Luckily, it's actually put together in a way that makes sense. It starts with the basics, defining all the important words, then it gets into who pays taxes, on what, and how.
Oh, thank goodness for that. So it's like a multi-course meal, starting with a glossary of tax terms.
Exactly. Part 1, called preliminary, might seem a little boring at first, but it's important. It defines those key terms: commissioner, company, interest, making sure everyone's on the same page from the beginning.
Makes sense. Wouldn't want any confusion when it comes to taxes, right? But are there any definitions in there that might surprise people? Something you wouldn't expect to see in a tax document?
Well, you know how it defines Kenya. It includes the continental shelf. Might seem strange at first, but it's really important for those offshore activities, things like oil drilling way out there, even deep-sea fishing. All falls under Kenyan jurisdiction.
Wow, never would have thought of that. Casting a wide net, covering all their bases. Okay, so definitions, check. What's next?
Next, we're getting to the heart of things. Part 2, imposition of income tax. This is where the Act really lays down the law. Who has to pay income tax in Kenya, and on what kind of income? Businesses, people with salaries, investors, it's all in there.
Sounds pretty thorough.
It is. And it gets into the specifics, like Section 3, charge of tax, makes it clear that residents, but also non-residents, can be taxed on income they make from Kenya. So even if you don't live there, if you're earning from a business or property in Kenya, be ready to pay your share.
Makes sense. It's about where the money's made, not just where you live. So anyone listening who's thinking of doing business in Kenya, this section is for them, right?
Absolutely. It's crucial to know the rules of the game before you start playing. And for those with a steady paycheck, Section 12, installment tax, it's going to be very familiar. That's where PAYE comes in, the tax that's taken right out of your salary each month.
Ah, PAYE, our silent partner in every paycheck. Easy to forget about until tax season rolls around.
Exactly. This installment system keeps the tax revenue flowing steadily for the government all year round.
Makes sense. Steady income, check. What other types of income does this action-packed Part 2 cover?
Let's see. If you own or operate a commercial vehicle, take a close look at Section 12A, advanced tax. That section deals specifically with the tax obligations that come with those vehicles.
Interesting. So it's not just the income from a business, but the stuff you use for that business, too. It's all connected. Okay, what else?
But then there's Section 12C, all about turnover tax. Now, this one's especially interesting for smaller businesses. They can choose between the regular income tax system or a simplified one based on their turnover, which could potentially make their tax life a little easier. Some smaller businesses might even be totally exempt.
Ah, so a bit of a break for the little guys. Makes it a bit easier to navigate those tax waters when they're just starting out.
Exactly. And finally, there's Section 12D, which deals with minimum tax. What this means is, even if your taxable income is quite low, maybe because of deductions or losses, some individuals and companies still need to contribute a minimum amount to the tax pool.
It's like a safety net, making sure everyone chips in at least a little bit. Okay, that's Part 1 and Part 2 covered. We've got our definitions and a good overview of who and what gets taxed. What other exciting adventures await in the rest of this act?
Well, hold on a second. Before we jump ahead, we need to remember that knowing what you're taxed on is only half the battle. The real strategy is understanding what you can deduct. And that's where Part 3 and Part 4 come in.
Deductions. Now we're talking. Those are the things that can save you some serious money, right?
You got it. Deductions are like secret passages in our tax treasure map. They can really shrink that taxable income, which directly affects how much you owe.
Okay, spill the beans. What kind of deductions are we talking about here?
Section 15 is your go-to for those precious deductions. For example, Imagine you're setting up a new business and need to lease a space. You can actually deduct those legal fees.
That makes a lot of sense. Getting a business up and running can be pricey, so that's a welcome relief.
Exactly. And here's one for all the hands-on folks out there. You can deduct expenses related to your tools wearing down. So say you're a mechanic and your wrenches are starting to show their age. Those costs are deductible.
That's fantastic for mechanics, carpenters, anyone who relies on their tools to make a living.
You said it. And with so many people working remotely these days, this next one is really relevant. Home office expenses. If you have a dedicated workspace set up at home, you might be able to deduct some of your rent or utilities.
Okay, that's huge for the remote work crowd. I'm guessing there are some specific rules to qualify for that deduction, though.
You bet. The Act states that you can only claim this deduction for one residence. So no writing off that island getaway.
Ah, there goes my plan to write off my entire island getaway. So there are limitations, as with everything tax-related. What about expenses you can't deduct? Where do we find that fun information?
Well, before you get too excited about writing everything off, Section 16 lays out the expenses that are a no-go for deductions. It's a bit of a balancing act, knowing what you can get away with and what you can't.
Right, like walking a financial tightrope. So we've covered the ins and outs of deductions. What's next on our grand tour of the Kenyan Income Tax Act?
Parts V through IX. This is where we go deeper, looking at how income is calculated in all sorts of different situations.
Huh.
Farming, non-residents, trusts, they've thought of it all.
Okay, so they're covering all the bases, making sure every possible income stream is accounted for. Any particularly interesting examples in these sections? You know, those aha moments that make you see the act in a new light?
Absolutely. For example, take Section 17, which deals with income from farming. It actually gives farmers some flexibility in how they value their stock. They can choose between different methods, which can have a big impact on how much tax they end up owing.
That's really interesting. So a farmer who really understands those nuances could potentially reduce their tax burden all above board.
Exactly. It just goes to show how important it is to be informed and strategic when you're dealing with tax stuff. And here's another cool detail. Section 4B and the 11th schedule are entirely dedicated to export processing zones. These zones are vital to Kenya's economy, attracting foreign investment, boosting exports, so it makes sense that they have their own dedicated section in the Act.
Right. It shows how this document is a reflection of Kenya's economic priorities.
Exactly, and it doesn't stop there. The Act gets into the nitty-gritty of income from insurance, that's Section 19. Then there's cooperative societies in Section 20, even members clubs in Section 21.
Members clubs. That's incredible. They really haven't left any stone unturned in their quest to define and tax every single source of income. But with all these different sections and scenarios, it can still feel a bit overwhelming. If someone's just trying to understand their own personal tax obligations, where should they focus their attention?
That's a great question. While it's good to have an idea of how broad the Act is, you don't need to memorize every single section. For most individuals, the third schedule is going to be their best friend.
Okay, the third schedule, what's so special about it?
This is where you'll find the tax rate tables, all the details about how your income tax is actually calculated. You'll see the different tax brackets and rates so you can figure out how much tax you'll pay based on what you earn.
Ah, the tax brackets. The sliding scale of financial responsibility. What else is hidden away in this treasure trove of tax info?
The third schedule also outlines personal reliefs, which are basically bonus deductions just for individuals. These can lower your tax bill even further. For example, there's insurance relief, letting you deduct a part of your insurance premiums, but it has a limit of 60,000 shillings.
Like a little reward for being responsible and having insurance.
You got it. The third schedule also makes a clear distinction between tax rates for individuals and for corporations, so you can see the differences depending on how you're structured.
So we've got the third schedule for understanding those tax rates and reliefs. Any other must-read sections for the average taxpayer?
Well, we talked about how important it is to understand what's taxable and what you can deduct. Sections 3, 5, 12, and 15 will give you a good grasp of those core concepts.
Right. A quick recap. Section 3, the charge of tax, defines who is liable for paying taxes. Section 5 dives into what exactly counts as taxable income. Section 12 covers installment tax and the wonderful world of PYE. And finally, Section 15, our handy guide to navigating those all-important deductions.
You've got it. These sections are your foundation for understanding how Kenya's income tax system works. But even with all this knowledge, it's super important to remember that tax law is constantly changing.
Right, like a chameleon adapting to its environment. What might be true today could be completely different tomorrow if a new amendment or revision comes along.
Exactly. That's why, even though this deep dive gives you a solid starting point, if you have a complicated tax situation, it's crucial to get professional advice from a qualified tax consultant.
It's like having an experienced guide when you're venturing into uncharted territory. Speaking of guides, we've covered a lot of ground today. Any final thoughts before we move on to listener feedback?
The key takeaway here is that the Kenyan Income Tax Act, while undeniably complex, is designed to create a tax system that's fair and that works. By getting a handle on its structure and the key sections, you empower yourself to make smart decisions about your money and your taxes.
Beautifully said. So, to our listeners who've joined us on this deep dive into the Kenyan Income Tax Act, what were your aha moments? What surprised you, intrigued you, or left you wanting to learn more? We'd love to hear your thoughts.
So much to unpack with this act. We were talking about these special economic zones, these export processing zones. Sounds like they're a pretty big deal in Kenya.
They are. They've really helped to attract foreign investment and give the export sector a boost. So having a whole section dedicated to them in the Act, it just makes sense. It's all about creating a business-friendly environment?
Right, like a siren song for international companies. Come to Kenya, set up shop in one of these zones, and enjoy some favorable tax treatment.
Exactly. It's all part of a strategy to stimulate economic growth.
Makes sense. So we've covered farming, export zones.
Oh.
What other fascinating corners of the Kenyan economy does this act illuminate? Well, it also dives into income from insurance, which you can find in Section 19. Then there's Section 20, all about cooperative societies, a really important part of the Kenyan economy. And, believe it or not, there's even a section on members clubs.
Members clubs? You're kidding. Like golf clubs, social clubs, they have their own section in the Income Tax Act.
Section 21, to be precise. It just goes to show you they've thought of everything, every possible source of income, every little detail, it's all in there somewhere.
It's mind-boggling, but also pretty impressive. They really did their homework. But I have to admit, with all these different sections and scenarios, it can feel a bit overwhelming, even with a trader map. If someone's just trying to get a handle on their own personal tax situation, is there a particular part of the act they should focus on? Like a greatest hits of personal income tax?
You read my mind. Well, it's great to appreciate the sheer breadth of the act. You don't need to become a walking encyclopedia of Kenyan tax law. For most people, the third schedule is going to be their best friend.
Okay, the third schedule. What's so special about it? Why should we befriend it?
Well, this is where you'll find the tax rate tables, the nitty-gritty details of how your income tax is actually calculated. You'll see the different tax brackets, the rates, all the information you need to figure out how much tax you'll owe based on your income.
Ah, the tax brackets. The sliding scale of financial responsibility. What else is tucked away in this treasure chest of tax information?
It also covers personal reliefs, which are essentially bonus deductions specifically for individuals. These can really help to lower your tax bill.
Bonus deductions. Okay, I'm listening.
For example, there's something called insurance relief, which allows you to deduct a portion of your insurance premiums. So it's like being rewarded for being responsible and having insurance coverage. However, there is a cap on this relief, limited to 60,000 shillings.
Right, there are always limits. Can't have everyone writing off their entire insurance premiums. So that's insurance relief. Any other noteworthy personal reliefs hidden in this third schedule?
Well, it also differentiates between tax rates for individuals and corporations. So whether you're filing as an individual or running a company, you can see how the rates differ. It's all about transparency and clarity, which is refreshing when it comes to tax law.
Definitely. Transparency in taxes is always a good thing. So we've got the third schedule for understanding those tax rates and personal reliefs. Any other must-read sections for the average taxpayer, or are we good to go on our own now?
Well, we've talked a lot about the importance of understanding what income is taxable and what you can deduct. To really solidify that understanding, you'll want to spend some time with sections 3, 5, 12, and 15. They lay the groundwork for those core concepts.
Okay, so a quick refresher. Section 3 is the charge of tax, defining who is liable for paying taxes. Section 5 delves into what exactly qualifies as taxable income. Then there's Section 12, which covers installment tax and our old friend PYE. And finally, we have Section 15, our trusty guide to navigating the world of deductions.
You've got it. Those 4 sections are like the cornerstones of understanding the Kenyan income tax system.
Solid foundation, got it. But even with all this newfound knowledge, it's important to remember that tax laws are constantly evolving, right? What's true today might not be true tomorrow.
Absolutely. The Kenyan Income Tax Act is a living document. constantly being updated and revised to keep pace with changes in the economy and government policy.
Like a chameleon, constantly adapting to its environment. So what you're saying is, even with the best treasure map, we still need to watch our step.
Exactly. That's why, even though this deep dive has given you a really solid understanding of the Act, it's still crucial to get professional advice if you're dealing with a particularly complex tax situation. A qualified tax consultant can help you navigate those trickier areas.
It's like having an experienced Sherpa guiding you up Mount Everest.
Precisely. They know the terrain, they've seen it all, and they can help you reach the summit safely.
Love that analogy. So before we move on to listener feedback, any final words of wisdom for our intrepid explorers of the Kenyan Income Tax Act?
Just this. While the Act might seem intimidating at first, it's ultimately designed to create a fair and functional tax system. By understanding the structure, familiarizing yourself with the key sections, and seeking professional guidance when needed, you empower yourself to make informed decisions about your finances.
Beautifully said. So, to our listeners who have joined us on this epic adventure through the Kenyan Income Tax Act, we want to hear from you. It's amazing how much this act reveals about Kenya's priorities. We talked about those export processing zones, how they're designed to attract foreign investment and boost exports. It's like a whole economic strategy embedded in the tax code.
Exactly. It shows how interconnected everything is,
Right.
tax policy, economic growth, individual choices. It's all part of the same tapestry.
And remember that bit about permanent or semi-permanent crops? The fact that the minister has a say in defining those terms, that's fascinating.
It is, isn't it? It highlights the level of detail and nuance within this act. It's not just about numbers, it's about understanding the intricacies of different industries and economic activities.
It's like those choose your own adventure books we used to read as kids. Every section, every clause, it's like a potential fork in the road leading you down a different path of tax implications.
I like that analogy. It's true, the Kenyan Income Tax Act is full of twists and turns, but with a little guidance and a spirit of exploration, it's a journey worth taking.
Well said. So, to our listeners, we encourage you to take this knowledge and run with it. Dive deeper into the Act, talk to a tax professional, and most importantly, see how these rules apply to your own unique situation. Because at the end of the day, that's what matters most.
Absolutely. This deep dive was just the beginning. The real adventure starts when you take this information and use it to make informed decisions about your own financial journey.
Beautifully said. And on that note, we'll wrap up this deep dive into the Kenyan Income Tax Act. We hope you've enjoyed exploring this fascinating document as much as we have. Until next time, keep asking questions, keep digging deeper, and most importantly, keep learning.